Meanwhile, President Trump took to the road this week, speaking in Huntington, West Virginia on Thursday night. It was a rally that the Democratic governor of West Virginia announced he will become a Republican. The president also touted the stock market at that point, saying that things are good.
The stock market reached yet another all-time, in history, all-time high today.
So, a Trump rally or an earnings rally? Neuberger Berman president Joe Amato joins me right now to talk more about this market. The earnings for the first quarter were up 15% or so. The second quarter, we're looking at earnings expectations, earnings growth of 11%. What's driving this, and is that a reason to own equities?
I think it is a reason to own equities in that you're seeing macroeconomic support for the underlying bottom-up fundamentals that the companies are showing. So, you see a continued accommodative environment with interest rates remaining relatively low and a path toward higher rates, but still rates likely to stay low over a long period of time, and that's stimulative to the economy. And on top of that, you've had companies who continue to work hard to improve their margins, and you've had some top-line growth to help the operating leverage in these companies.
Yeah, I guess the Federal Reserve is a bit of a question mark, because we know that the Fed started raising interest rates, but is there a real expectation that we'll get further interest rate hikes? Because the economy is good, but it's not gangbusters, and you worry that, some people worry that the Federal Reserve is going to smash an economic recovery that's just getting started, just gaining traction with a string of interest rate hikes.
I think the Fed is one of the big question marks out there, and it's really two pieces. One is the rate path, where as of now, the markets are still expecting December to probably not have a rate hike, although given the strong employment numbers that came in this week, you might see the market tick up in their expectations of an additional rate hike. But then you also have the balance sheet. So I think a lot of the focus in the market over the course of the next couple of months is going to be this balance sheet roll-off, the pace of that, and how that affects forecasts for where rates are going to go.
It's a huge balance sheet, $4.5 trillion. They say they want to unwind it. Will they be able to do that with no disruption?
Well, they've been very clear in terms of the pace that they're moving at, which is a very modest pace, and they would describe it as on autopilot.
Right.
However, it's not just the Fed, right? You've seen over the course of the last 7-8 years, central banks across the globe, the major central banks' balance sheets have gone from $4 or $5 trillion to 13, 14, 15 trillion. And we see a peak in central bank balance sheets occurring probably early 2018, and then you're going to start to see that recede. And I think none of us really understand what the full implications are, because we've never seen that before. We've never seen central banks increase their balance sheets to the extent they have, nor have we seen that roll-off effect. So it's something to watch very closely.
Yeah, it's unprecedented. Let's talk about investing today and allocating capital. You have backed off a bit large cap equities, right? Tell me how you allocate capital in this environment today.
Well, in our asset allocation process, we looked at the returns of U.S. equity markets, and large caps did particularly well and meaningfully outperformed small caps. So we pulled back our asset allocation to large cap equities, but we still maintain a constructive view on small caps. And small caps also have the benefit of any policy changes, particularly in taxes. Small cap companies tend to pay higher tax rates. So that's an upside that we would see in small caps.
Do you think they are going to get tax reform done? How much of that is priced into the market at this point? Because we've been talking about really strong earnings driving things. How much is tax reform getting done priced into this market right now?
I think very little is. I think given the policy failures over the course of the last 6-7 months out of Washington has really reduced the expectations of the market that anything is going to get done. Ironically, I think the failure of health care increases the likelihood of tax reform, in that the Republicans in particular, now controlling, of course, the White House, the House and the Senate, have a lot of pressure to get something done. And I think tax reform, unlike health care, is in many respects more about math than it is around the emotional issues that can surround something like health care reform. So we think a modest proposal in tax reductions will occur. I don't know if I'd call it reform, but if you get a modest reduction in corporate tax rates in particular, that adds to another boost in the earnings growth that we can see. So if you get rates into the 20s, you can see $5 to $10 per share in S&P earning increase as you look forward to 2018 and beyond.